please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Numbers are pretty bad. We were expecting a loss of 122 crores, but the net loss is more than 3,100 crores.
30% increase in the company's profitability on a quarter-on-quarter basis and much better than what the street was anticipating.
The key thing to look at is the operational improvement this time, which has come through for Sun Pharma.
Oil is sinking today, 4% for crude as OPEC and Russia weigh easing output limitations.
Dollar index hasn't blinked, up 2/3% this week.
Good morning. Welcome to Bazaar Morning Call. I'm Lata Venkatesh and with me are Anuj and Sonia. And Sonia is correctly attired today, I would think. I mean, we haven't seen this kind of a crude and a macro scenario for quite some time now. We've been above the $75 mark for a goodish bit on crude. Even at close on Friday, crude prices were still at 77.5. But today morning at 74.5, that's $3 lower. If that $2 lower in Friday could engender an over 100-point rally, then one must expect a decent start. Let us remember that crude is a very, very big input into our macros and into our mind space. The whole foreign currency market is now weighted long dollar and short rupee. With this kind of a number, 74.5, 75, you'll see a lot of that positioning change. Likewise, the bond markets are positioned for disaster, as if there are going to be 4 rate hikes. So when crude moves, there's going to be a bit of a move towards the 7.7 from, where we were, 7.9. We must remember that it was only the macros which were giving us away, and largely because of crude. Not entirely, but largely because of crude. So there is going to be some bit of a benign impact that we are going to see. Notably, I would look at NBFCs, PSU banks and OMCs very closely today. I think they will recover a lot of lost ground.
Okay, Lata, hi, good morning. Anuj, morning. So, good start to the week, perhaps. And there are fundamental reasons to back that, right? OPEC has said that production will rise by 1 million barrels per day. And not just that, Russia, US, Saudi Arabia are going to be sort of increasing output. So, of course, there are fundamental reasons. But even if you look back home, we were just listening to our colleagues talk about the big numbers post-market hours. And although it was a mixed bag, the consensus is positive. Whether you look at Tech Mahindra, whose numbers were much better. Sun Pharma as well, right? The US business has seen an improvement. So, let's see how that one shapes up. Of course, PSU banks' losses continue.
No, I don't think. I think I wouldn't be surprised if the BOB reaction is almost as good as SBI. Not as good, but it can be very good. There is definitely a feeling that a catharsis is over.
Okay, so well, that's another positive then to look at. Anuj, morning. What's the sense you're getting about how the week could start up? I mean, last week was not great, but it was a mixed bag, right? We had a couple of good days, a couple of bad days. You get a sense that, or is the screen telling you that there's more volatility in store?
Morning, Sonia. Morning, Lala. Look how the markets have changed. Both of you didn't even talk about Larsen and Toubro. That comes out with numbers today. And, there was a time that was the benchmark or barometer of market sentiment. I think that could still be, while we're all talking about other stuff. Just keep an eye on that. That could be a bit of a game changer today, the way the numbers come. But look, my basic sense is that, the markets have dodged a bit of a bullet. It was a sharp decline for the market, and it looked like the market was making a move back towards the 200-day moving average. That didn't happen, and the market bounced back from 50 DMA itself. So now the market's texture is buy on dips, 10,480 as a support, but you'll have to buy the dips, because while I agree that crude has slipped quite a bit. Our markets normally have a tendency of presaging events, like even before the Yediyurappa government fell, the market had sort of discounted that, and the way the market had fallen earlier. Now, the kind of rally.
A lot of the reaction perhaps took place on Thursday and Friday.
Could be. Also, the issue here is that is this for real? I mean, are we now headed back towards 70? Because now you're so vulnerable to a move in crude. If you're saying that, you go to 80, all of a sudden the market goes to 10,300, you go to 75, all of a sudden the market goes to 10,750. In that kind of scenario, the market normally wants to bide its time and see. And this is expiry week as well. So there are a lot of shorts they may cover. And also the 20 DMA is 10,670. Normally you have a bit of a 20 DMA halt. So if there's a gap up and you're chasing that, the risk reward is not in your favor. If there's a bit of a gap down or flat start, then perhaps, you could buy, and, your stop loss is sacrosanct somewhere around the 10,470 mark. I think the point that Lata is making, I just want to carry this forward. The bank versus IT trade has reversed. If you see, I don't know if it's reversed for good. This month, the bank Nifty is up 2.9% and IT index is down 1.6%. While this year it's been all about IT so far. That way, and with the way currency has also strengthened, if banks continue to outperform, then the market will go up, because banks obviously account for much more. But as I said, the market is extremely sensitive to move in crude prices. That way, positional trade is going to be a bit of a tough ask. Also on Friday, we saw a big jump in quality mid-cap stocks. In fact, on Friday and Thursday, stocks like Ashok Leyland, Motherson Sumi on Friday. A lot of stocks which had fallen a lot. Perhaps that could be the way. Just one point here, markets like Thursday and Friday tend to make you believe that the worst is over, and again you want to dabble into some small caps, mid caps. Don't do that. This is not that market. This is the market for large caps and quality mid caps.
But the market has started to reward a lot of good numbers, right? We saw it with Page Industries on Friday. So there is, of course, interest in a lot of the non-index large caps that are reporting good numbers as well.
Yes, and and equally, market punished Motherson Sumi. It was also quite a brutal for Ashok Leyland as well. So let's see. It's giving opportunities both sides. On the index, as I said, now it's a bit of a binary trade on what's happening with the crude oil prices.
No, actually, just to add, the Indian macros cannot be manufactured in the Middle East. It has an important factor, but there are inherent Indian moves also that the market will watch out for. It is just that pessimism over Indian macros had gone to a point we were behaving as if $80 is the average for the year. Now, what perhaps the correction will take into account is that 80 may not be the average for the year. We will see both sides. We will see 80 and 70, and perhaps therefore some of the ugly forecasts on macros could get wound down a bit. And after all, the rains are about to hit the Kerala coast this week. So there will be that bit of a bonhomie. There are other factors also that are going good. And of course, there are some bipoles as well. Yes. So, the markets will perhaps forget crude in a couple of days when the bipole results come and look at something else. But for the moment, I think that pessimism of, $80, what happens to current account, what happens to fiscal dividend, what happens to inflation, what happens to all the NBFCs, all of whom have borrowed, 2 percentage points lower. Now, all of them are going to face higher costs. That extreme anxiety may die down a bit.
Okay, I know we're talking shop, but let's spare a moment for that IPL final yesterday, right? What a fabulous century it was by Watson.
Oh, yes, and I was in the stadium watching the match, and Shane Watson was struggling. For first 10 balls, he didn't score a run.
And then
it was like a beast.
That century came out of nowhere.
Yeah, exactly. And
I was just hoping that Rashid Khan would get a chance to bat.
Yeah.
I guess. Well, Barthwaite was the better batsman to have sent. They had only that much time. But I really wanted to see his batting.
And I'll just tell you one thing. The legend of MS Dhoni just keeps growing.
Absolutely.
The one thing which, I'm not a massive Dhoni fan, but one thing which, which I really liked is the way he let the team celebrate, and he was just, on the sidelines and, watching everyone, and that, I think, that was really good to see.
I know, IPL after IPL, right, winning it.
Yeah.
And winning by 8 wickets is no mean feat. Well, all right, we had a great weekend for all the sports enthusiasts, but now we have to talk shop once again. Let's tell you what our wise experts have to say as we head into trade this Monday. Alexander Redman of Credit Suisse believes the forex moves in the recent 5 weeks amount to a dollar bear market rally. He argues that the diverging US twin deficits, the structurally eroding US net international investment position deficit, and US political challenges will more than offset the benefits for the dollar from rising interest rate differentials, elevated economic surprises, and some evidence of reconciliation in the US trade dispute with China. He forecasts the EM forex appreciating by 2.4% versus the US dollar over the next 12 months.
Well, that's the other point to note. Not only is crude a little cheaper, we will see if, as Redmond says, you see the dollar also receding, then that can be two good issues for Indian equities, like for emerging market equities. Let's get you some money market views. Pramil Brahmat of Veracity says correction in crude oil prices will help rupee recover lost ground. Says optimism in domestic equity markets can be another factor which will help the rupee appreciate. He expects spot USD now to trade in a range of 67.50 to 68. A lot of people will expect that 67.50 could get broken.
Okay, and Ajay Magnolia of Edelweiss says the bond markets will be buoyed by the sharp drop in crude prices and yields are expected to ease further at opening. However, he adds the absence of an open market operation announcement last week might be an overhang, and the rally could lack momentum, resulting in a partial reversal of early gains. He expects a 10-year benchmark bond yield to trade in a range of 7.72 to 7.80% today.
Okay, over to Mangalam then for the world view.
Well, the big news from the world definitely is the decline that we're seeing in crude prices. Remember, Brent as well as NYMEX, both of them have fallen about 5.5% to 7.5% from the recent peak that we've seen. You guys have been speaking about it, so we'll keep an eye out on how that impacts the world markets. The other big news that came over the weekend is that the meeting between Donald Trump and Kim Jong-un is well and truly on, because Donald Trump tweeted 6 hours ago saying that his United States team has arrived in North Korea to make the arrangements between the summit between King and him. He truly believes that North Korea has brilliant potential and will be a great economic and financial nation one day, and Kim Jong-un agrees with him on that. It will happen with an exclamation mark. As a result of that, the US futures, they indicate a positive start, about 80 points in the green for the Dow futures. However, that's as far as today is concerned. On Friday's trading session, we saw some declines on both Dow as well as S&P, and the key draggers, understandably, were the oil companies, the likes of ExxonMobil as well as Chevron. The one thing that was heartening is that US consumption is well and truly on as well. Foot Locker, the athletic shoes maker, reported good set of numbers. Home improvement company Lowe's made a good set of numbers, as well as Tiffany & Co. as well came out with a good set of numbers. Good close in the European markets, barring the Italian index, which continues to be under political pressure. And the Asian markets, most notably Korea, is outperforming. The SGX Nifty indicates a flattish start.
Okay, thanks a lot for that. Well, Mangalam, we're going to take it forward from there. The big story, oil prices have eased quite a bit. David Lennox of Fat Profits joins us to talk more about that. David, a lot of happenings over the last 24 hours which have caused crude prices to ease. But what's the sense you're getting? The fear of supply shortages are now behind us, you think, and $80 is a top for the near term?
Look, certainly we've been very keen to keep our end of year target for Brent at $74 to $84. So for a while there, it looked as though we were certainly going to be challenged on that. But as we've seen now over the course of the last couple of days, we saw Donald Trump come out and suggest again that the oil price was perhaps sitting too high for his liking, or that matter for the US. And we did see a fairly prompt reaction from the Saudis in terms of suggesting that they would look at the 32.5 million ceiling that is in place and perhaps lift that ceiling. And of course, over the course of the last 2 trading days, we've seen what that's done to the oil price.
Okay, so David, good morning. Would you work with a different range now? Is your range for the remaining part of 2018 74.84, or would you say the range could be, say, 70.84?
No, look, at this stage, we'll be very happy to keep that range at between 74 to 84. We had been always working on the premise that there would always be some supply side pressure, and that we thought that would be coming from the US domestic production scene, where we've seen over the course of 2018 domestic oil production in the US rising by some 1 million barrels, up to now 10.7 million. So that was always going to be a pressure point against a rally in the oil price. And we had that support, we thought, from OPEC in terms of maintaining that ceiling of 32.5 million barrels. So that's why we've been very comfortable to keep that range. We're now seeing perhaps a little more pressure to the supply side, and that, of course, is now damaging the oil price, and we've seen that reaction. We're not at this point really ready to change our range. We do now have to wait and see if, in fact, OPEC and the Russians do follow through and do lift that ceiling production. They've been very good with compliance to date. We just now have to wait and see if they move to the other side.
So one statement on not adhering to supplies can, of course, change the arithmetic completely. Thank you very much, David Lennox, for joining us this morning and making this unscheduled stop. But he's not changing 74.84 as his range, but it's already knocking at the lower end of the range.
Okay, that's a big positive for us, right? Let's do one thing. Let's take a short break. When we come back on the other side, we're going to focus on the list of top 10 stocks to watch for the trading day. starting the week with a lot of key stocks that you need to watch out for as we head into trade today. Of course, a lot of big numbers coming out today as well, names like L&T, etc. So do keep an eye out on all of that. PC Jewelers is the company that we're going to focus on right now. It posted earnings which appear way below what the street was estimating. Revenues have declined, led by weaker exports. The operational performance, though, remains just about okay. Profit growth is lower because of higher finance costs. Sanjeev Bhatia, the CFO of PC Jewelers, joins on the phone line to talk about that. Sanjeev, hi, good morning. I want to start off by talking about the, the interest costs that have surged quite a bit. Interest costs are now almost 40% of your EBITDA. And on the conference call, you said that you're planning to reduce your debt. How do you plan to do that, considering that you've just announced a big buyback?
Yeah, if I talk about the finance cost, so basically, as your operations grow, the finance cost would obviously grow. But as a percentage of our overall operations, the finance cost has actually come down this year. It has not gone up. Okay. So this is the point number one. And point number two is that till date the company was using its own cash to grow its stores and expand. But now we are emphasizing more on franchisee stores, and therefore the cash which we have will be used to reduce our working capital debt and other liabilities. And obviously, this would also result in reduction of cash, reduction of finance cost.
So how much will the debt and the finance cost go down by, say, over the next 1 year?
Yes, surely.
No, by how much?
But, we have tried to give some figures in our presentation, but we seriously think that it would be a substantial amount, though it is not possible because just beginning of the year and we have started the reduction already. So I think the position would be much more clear by when we declare our Q2 results. Then we'll get to know the trend exactly.
Okay. Mr. Bhatia, even the revenue would be a matter of worry if you looked only at Q4. Of course, overall for the full year, the revenue is at, 13%. But what can you guide in terms of revenue and margins for FY19?
So one, I would like to clarify, if you look at our full year revenue, I'll start from my full year revenues. So there is an increase
of 13%.
17%, ma'am.
Okay.
Yeah. There's an increase of 17%, and within that also, if we look specifically at our domestic revenue, that has grown by more than 27%.
But exports were very weak.
Exports were weak, and we were saying right since the beginning and quite early before the year end that our exports are expected to remain more or less flattish this year, and that's what has actually happened. And because the UAE imposed import duty of 5% last year, and in this January 18, they imposed another 5% VAT also. Okay. So this disrupted in the last quarter. Obviously, this acted as a dampener.
So what is the expectation in FY19? You said exports will be flattish. What about the domestic side and overall as well? What are you looking at?
We are not giving any guidance for the future prospects at this point of time. We are just waiting for this quarter to be over. Then we'll get to know the trend. There are some news that the VAT may be rolled back. So we still have to wait for the exact policy matters to clarify.
Okay.
And then we'll be in a position to give the guidance.
Okay. Well, I will have to tell you, Mr. Bhatia, and you know that better than me, that the market is really looking more for guidance in terms of the sale of shares. If you can clarify whether there will still be these off-market gifts to family members. There is a suspicion that family members are possibly selling those shares in the open market. How would you reassure investors? Because the stock has destroyed a lot of wealth.
You are very right. And frankly, this was the first point in our con call on Friday.
Yes.
We clarified this point. And I would like to repeat to your listeners at this point of time that CCJ is a 13-year-old company. Till date, promoters have not sold or pledged or gifted anything, not even a single share till date. This was the first transaction done in 13 years of time by a promoter, elderly promoter. It was a personal decision, and The market has taken it otherwise because perhaps it was the first time. In the call, promoters have already expressed regret for the same. But at the same time, if I talk from the company's viewpoint, it has not changed the management control. It has not changed the strategy of thinking for the company. So it was a one-off transaction. This has happened.
Okay.
Promoters have expressed regret. And they have committed that this is not expected to happen again.
Okay.
Yes.
Just one more question, sir. Why is it that exports are flat and even overall revenues at 17%? You know, Titan guided extremely aggressively and even turned in a 20-25% revenue growth. They were not complaining about exports. What's going wrong?
No, there's nothing going wrong. But the type of jewelry which we manufacture and which we cater to, majority of that jewelry is sold within the local markets of UAE and Gulf. And it is not only us. It has been coming in regularly in the newspapers and in other publications also that India's jewelry exports have really suffered in this quarter because of the imposition of such a high amount of VAT. And that's a fact.
All right, Mr. Bhatia, we'll leave it at that. Thanks so much for joining us. So that's PC Jewelers' interest costs really hitting their operational performance quite a bit quarter after quarter. But our research team is now here to give us a list of other stocks you need to look forward to as we head into trade today. So let's welcome all of them. Anuj, what are you looking at today?
So, Sonia, two stocks basically. One is large cap, one mid cap. Bajaj Finance, I think it's the strongest NBFC stock, already at record high, of course. And if macro factors are going to dominate trade and bond yield, all these factors is going to make NBFCs perhaps sector of the day, then go with the best. The other is DCB Bank. It's a big bounce from 200-day moving average on Friday, and there was strong jump in delivery volume. So I would want to see if Friday's high is taken out on this one. So that could be interesting.
Okay. Well, Ekta, Sun Pharma numbers?
Well, I expect the stock to be in the green because it reported a better than expected operational performance this time round, with margins coming in at 24% versus expectations of 21%. And the street is very positive on the fact that they have around 3 specialty product launches in FY19, and hence that should keep the stock quite upbeat. Also, the fact that Halol might not need a re-inspection from the US FDA. CLSA has upgraded the stock to buy from sell.
Okay.
All right, thanks a lot for that, Ekta. Well, TechM was a good set, Rima.
Yes, numbers were above street expectations. The big positive was the improvement in margins. So margins have improved by 560 basis points on a year-on-year basis. And if you map the trajectory a year ago in March 2017, the margins were close to 8.2%, and that has consistently risen to 13.8%. Even in terms of revenue growth, constant currency growth at 1.7% at the higher end of what the industry's delivered. So its constant currency growth is only second to that of TCS. On the bottom line as well, big beat, profits going up by 30%, aided by a higher other income. The negative is that telecom continues to languish for Tech Mahindra, flat for the last 5 quarters or so. That said, the stock has seen a big run up, 40% in 2018 itself. It's still inexpensive when you compare it to peers, trading at a PE, F519 PE of close to about 16 times. Peers would be at that 18, 20, and some of the mid caps even more than 20x.
Okay, that's Tech Mahindra, of course, the strongest large cap IT stock. Abhishek, what about Bank of Baroda?
Well, Anuj, it was an operationally weak quarter for Bank of Baroda. If you look at the slippages and credit costs, they are the highest in last 8 quarters. So the slippages of 12,500 crore plus, 60 to 70% of these slippages were made up due to RBI's rule that came in on 12 Feb and the divergence for FY17, which was reported at 2,900 crore plus in the terms of gross NPA. So gross NPA in absolute value, however, increased only by 16.5% because the bank wrote off more than 4,000 crore in the current quarter. The gross NPA ratio was at 12.3 versus 11.3 in the previous quarter, and they now have a watch list of 10,000 crore in the coming quarters. On the positive side, domestic loan growth and low-cost deposit share are the best in last 8 quarters. So expect a slight bit of red tick on the stock today.
I would think that red will be bought. My sense is that I wouldn't be surprised at all if Bank of Baroda got a much better reception, because the price ranges on the street from Nomura to Jeffries are still ranging between 160 and 190 in the case of Nomura, if I'm not mistaken. So there, it could be taken positively. One, because they're outside the NCLT, their recoveries are 5,000 crores. Even if they can repeat that, that takes care. And they will get even NCLT-related recoveries because of exposure to all the steel companies. So my sense is that any incremental watch list that Abhishek spoke about can be compensated by the kind of, and they don't have very big power exposures. I mean, they have 200, 300 crores. They don't have, you know, 4-digit crore numbers to all the power assets. But separately, the other reason why I expect Bank of Baroda and most of the PSU banks and NBFCs and OMCs to do well is the crude impact. I mean, they got beaten black and blue because of the cost of money. So basically, look at those stocks. They are going to be the market leaders today.
Okay, well, talking about some of the green stocks and stocks that will move up, Divi's Labs was not a bad set. Ekta, at 2% revenue growth, but I mean, how does it compare to what the street was watching out for?
Well, the street was expecting subdued numbers from Divi's Labs, and they have pretty much written off the revenue growth simply because of the kind of regulatory issues that the company had undergone. So they are probably going to forgive the revenue for Divi's Labs, but the margins stand out because they've improved it all the way back to around 36% versus around 33-34%. So maybe the street is probably going to work on the focus on the operating efficiency and the fact that the revenue growth will eventually follow, considering both their units are now out of the regulatory issues.
Okay, Ekta, thanks a lot for that. Nigel, what about Nalco?
Well, Anuj, you know, on the top line, there was a good beat of around 100-150 crores. The margins, though, there was a bit of a disappointment there. That's because the employee costs did spike up and the PAT number as well did come in a tad bit lower. So it was a mixed set of numbers, but we are going with green because Q1 FY19 should be far better. We'll also get the management later today and they could clarify on what's the outlook. But otherwise, expect the stock to open up with mild green.
Okay.